People use the words investing and trading all the time, but do you really know what they mean? Have you ever looked at a stock and thought, should I keep this for years or sell it tomorrow? This is a very common question, and getting the answer right is very important for your financial journey. Stay with me, and by the end of this video, you'll know exactly which plan is best for you and your goals. Let's break it down. The main difference between trading and investing is how long it takes. Putting money into something is like planting a tree. You buy something like a stock or a piece of property and plan to keep it for years or even decades. You are putting money on its long-term growth and ability to make money. On the other hand, trading is like being a pro surfer. You don't want to own the ocean, you just want to ride the waves. Traders buy and sell assets quickly, sometimes within the same day, to profit from short-term price movements. So one is a marathon, the other is a sprint. How do you really make money with each one? When you invest, you want to make money in two main ways. Capital appreciation, which means the asset gets more valuable over time. Dividends, which are small, regular payments that some companies make to their shareholders. You could buy shares in a great company or an ETF and let it grow year after year. It's about making money. For traders, the game is all about how prices change. They buy things when they are cheap and sell them when they are expensive. They might even short sell, which is a way to make money when the price of an asset goes down. It's about making money quickly when the market is unstable. You need to think in a completely different way because of this difference in time and method. The investor's way of thinking is all about being patient and sticking with it. They look into a company's fundamentals in great detail, such as its health, its industry, and its long-term prospects. They need to be able to control their emotions, so they don't panic and sell when the market goes down. It's a slow and steady, set it and forget it approach. The trader's mind is set up for speed and discipline. They rely heavily on technical analysis, which means studying charts and patterns to predict where the price will go next. Because things can go wrong just as quickly as they can go right, they need strict rules for managing risk to cut losses quickly. One is strategic and patient, while the other is tactical and quick. Now let's talk about the most important thing: risk and reward. As you can probably guess, investing generally carries lower risk. You can ride out the market's ups and downs because you're holding for the long term. The returns are usually slower, but more stable over time. The opposite is trading. It has a lot more risk, but it could give you returns much faster. You can make a lot of money quickly, but you can also lose it just as quickly. The most important thing to remember is to be honest with yourself about how much risk you can handle. What are you willing to lose? Your response to that question is very important. So which one is best for you? Investing is probably the best way for you to build wealth for retirement, buy a house, or pay for your kids' education with as little stress as possible every day. It's meant for goals that will take a long time to reach. But if you love the markets, like making quick decisions, and have the time and emotional strength to handle the stress, trading might be for you. A common idea is that you don't have to pick just one. A lot of people use a mix of both. Put 90% of their portfolio into long-term investments for safety and use the other 10% for more active trading. This gives them the best of both worlds: steady growth and a little bit of excitement. In the end, the goal isn't just to make quick money. You need to know how money really works and how to make it work for you. What do you think you are now that you know the difference? Are you an investor or a trader? Maybe a little of both. Please leave your thoughts in the comments below. I read them all. If you liked this breakdown, please give it a thumbs up and subscribe to get more simple explanations of hard-to-understand finance topics. Thanks for watching, and I'll see you in the next one.